Just gonna review, trying to review. So first with the daily chart, you see that all that happened was market tapped into ice right here, testing the breakdown. So this is very important. Now going into this chart, you'll see how I work it. So delete. All right. So a couple of things you want to do. You have your sideways movement. Remember, this whole thing is nothing more than an uptrend, but that uptrend is really a pullback on the daily. Again, all these bricks going up is just a pullback on the daily. So you have to know that. So what we see here, you had sideways movement, then you had a rally. I don't know why I can't do that, maybe. Anyway, so you had this rally pulls back to, I don't know why this, if I do it like that, rally pulls back to halfway back, and there's always certain points you have to watch. All right, so halfway back into creek, then does another with a halfway back over here, but this time it does a halfway back. Then over here, this is where I knew, like, okay, there's a big problem with the longs. When this happened, this is smart money right there. You see, against this resistance area, what happens to support resistance? I explained this in the prior video. You have, what is it, breakouts, rejections, absorption, spring and upthrust. Breakout, rejection, absorption, and spring and upthrust. Basically those four scenarios. So this is at resistance, and what happens at resistance? You have your upthrust, which is just heavy selling, all right? It's just heavy selling telling you what? It's a failure. So it failed. So fails or rejects or whatever we want to call it on heavy volume, and this is biggest volume 49 waves, biggest price in 16 waves. What does that mean? That's the question. What does that mean? This is legitimate, like very, 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 very strong that the market's going to puke. You know why? Because it's the volume off the top, right? Volume off the top, followed by your change of behavior right there. And look at Big Red over here. So coming from an up thrust position, rejecting prices. So I was watching this, I knew that's its game over. Like at least it should come back and pull back. The trend is broken. That's for sure. All right, so put the trend line and you have your average or whatever, right? You have the volume off the top forcing follow through in terms of a change of behavior, and then after that, just tap. So after that, it goes right here. I thought it was going to pull back one more brick, but it didn't pull back one more brick. It just stopped right here. You want to know why? Because this is the breakout. So all it's doing is testing the breakout. And what's nice is, you just take your pullback measurement tool, whatever you want to call it. It goes right to the 50% in testing the breakout. Tap, reject, right there, rejection. Goes and retest, and if you notice, very, very minute upthrust right there. So right there. So first rejection, second upthrust, puke fest goes, and your breakout right here. Right below this crack breakout, you had your second level of breakout. Oh, there is no second level. So this was probably, they were trying to probably buy, but the sellers overcame the buyers. And this is probably your next breakout to the downside right there. So, one, surprising it's not over here. Anyway, it's up there, but this here, it must have broken something. Just don't see it. All right, whatever. So this the breakdown, this the breakdown, this failure, breakdown, la 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 la. So I'm going to be looking to see, because this is definitely not shortening of the thrust. So probably it failed over here quite nice. Watch this. You see a pullback. It's very likely going to pull back, tap the breakout. You just need a little bit more, and we'll see how it behaves when it pulls back. And these are big moves, folks. It's not like a shit move, all right? It's not $200 or whatever. This is if it taps in, you offer the sell. That's a very nice opportunity. Anyway, so I'm going to be trying to get that. All right, so now just take a look at what happened intraday. Okay, before I go any further, I've already explained the last video that the way you read markets, right? There's an easy way to read them. First, you just start with support and resistance. Everybody knows how to do that. What's support and resistance? It's just turning points, highs and lows of turning points. All right. Next, that support and resistance has to be framed within trend. Very important to do that. And you know what trend is. It's just support and resistance levels that are going higher to make uptrend or lower for downtrend. So these two, support and resistance within trend. You know how to do this already, and you should start with at least one level higher time frame. So step one, support resistance within trend. Step two, all you gotta do is around those support resistance line is where it gets interesting. The rest is very difficult to read because it's like it's not outstanding in terms of it doesn't appear, like I'll give you an example. Over here on this breakout, this volume exceeded 1, 2, 3, 4, 5, 6, 7 bricks. That is outstanding. That is sticking out as a breakout, right? But the rest of these ones and twos don't mean nothing. I can't figure, I don't know what the hell that is. So that's what you want to do. Okay, now around those support and resistance lines, you will get just a couple of behaviors. Breakout, failure to follow through, by the way. Failure means failure to follow through, which is typically 1 or 2 bars max, but typically only 1 bar that fails and just keeps on going. All right. Then you have absorption, and you have what the other one? Oh yeah, spring and upthrust. All right, so you must know these because when you're trading around support and resistance, you have to know these behaviors. You have to know what they mean, and it's just 4 of them. It's better than memorizing 40 patterns or 40 candlestick pattern or chart patterns, right? So these 2 things, in my opinion, is what you need to know to be able to read a chart. 1, support and resistance within trend, and then just these behaviors around support and resistance. Now I'm not going to go into entry and all of that. That is going to take too much time. But this is how you start. All right. The wrong way to start is, okay, I'm going to start with an arbitrary mathematical calculation, also known as an indicator. That's not how you start. Indicators can help look for things like momentum is weaning or volume is dropping, or, but to start off there is incorrect. You're going to get the wrong, wrong results. Right? So these 2 things. So now you're going to see how I apply it. So also the other thing I want to mention is 3 important things about trend. We want to look at 3 things about trend. 1, thrust. 2, the trend line. I was never a fan of trend lines, but I think they are actually important because they measure speed. And also, with the old saying about, it's not the trend line tap or something, it's how it breaks. The question is, what do you mean by how it breaks? What do you mean by how the trend line break is important? Well, the answer to that is there should be a change of behavior breaking the trend line. That's meaningful. It should not just be a regular penetration of, a regular one. It needs to be an entire wave, a wave of buying or selling that is strong, that breaks that line. That is a break-in. That will help. One of the things that will help breaking trend. You also want to look left to see if there's any climaxes and things like that. So anyway, trend line, thrust trend line, and halfway back. These are your trusted tools for measuring trend. Thrust from high to high or low to low to see if it's expanding, is it declining. Trend line to measure speed, which is the original momentum indicator. And 3 is halfway back. Why? Because pullback typically go about halfway back. Good pullbacks go about halfway back, and by good pullback I mean lesser risk pullbacks, normal pullbacks. If it doesn't go halfway back and you get in, there's going to be a lot of risk, and later on it'll spring and stop you out. So these 3 things. Okay, now with that said, we're going to start analyzing. Right. So, and also one other thing to do this, you have to know where the turning points occur. Right. So turning points, they occur in a couple of places. Where? I'll explain now. They occur at key levels. Where you will see them. The first thing is the counter trend, because the market rallies and it has a pullback that starts. So what happens is you have, I'll explain. Yeah. Okay, right there, right here, you have a turning point. Okay, this is the counter trend turning point. That's where you get it. All right, you get it, and this is counter trending. Second place you get it is at Ison Creek. All right, so typically there's a breakout, and you will get a turning point when it taps Ison Creek. Where else? Many times it will go lower than ISO Creek. All right, it will go lower. When it goes lower, it will tap the low bar right here. For a very low risk trade, it'll tap, it's basically the first up bar. So that first bar, so I just call it the low bar or the high bar when you're shorting. Where is that? So the high bar, low bar, it's just a very deep pullback. After that, especially in sideways markets, you will get behavior that's like this. Maybe let's say like that, and goes back down. It happens all the time in consolidations, where you'll get what? A spring. Right? Then you might get something that's over here, where it'll go sideways a bit. It'll form a springboard, the absorption springboard. Right there, you will have turning points there as well, which will be your, what is absorption? Absorption. Finally, there are times when you have strong market, and instead of going all the way back down here, it will pull back somewhat. It won't go all the way back down to creek. It'll stop before it goes down any further, and where it stops is usually a high volume node or a high volume brick, and then it goes. So why am I doing this? Because you must know where you are in the higher time frame at all times, in order for you to anticipate where the turning point will occur. It's very important to understand and anticipate where the turning point will occur. I'll give an example. Right here. Obviously, this is a turning point. How do I know? Obviously, this is a climax. This is buying pressure. This is a slight higher high. Right? But if I don't have the expectation or knowing where in advance where it could happen, I feel less confident. And also, if I don't know that this is a counter trend turning point, I will feel overconfident trying to milk the move instead of knowing where to get out as soon as the market hits a level, right? So where did this turning point occur? This turning point occurred when you take a look at the higher time frame. It occurred at the low bar. The higher time frame rallies low bar. So you mark that. You have to mark it because it's giving you information. All right. Then the market goes up, and here it sells. Where is this turning point coming from? With the biggest volume in 32 waves, where is this? Where is this? It is coming from a breakdown. All right, it's coming from a breakdown. All right. So this one came from a breakdown. Its breakout to the downside is the same as a breakdown. All right. Now the market continues to go down, 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 down. All right. Here you have some climactic action and a reversal potential. But do I see any levels? I don't see. Yeah, it's off of this ledge right here. But these are all counter trend. As far as I'm concerned, these are all counter trend. So this one right here is a counter trend, meaning on the higher time frame you have a rally down, and the rally is getting ready to pull back. So this is a counter trend, and you see the buying right there. And there's some climactic action, but it's not enough for me to really say, yeah, that's climactic. Here is very obvious. The 49 followed by this is very obvious. Climax, change of behavior. Even though it's a small move, it's not that obvious here. If it was in like 30s or 28 or whatever, it would be easier to judge. So we have a little bounce here. All right. Anyway, so I gave this lesson about turning points, as well as you could call these levels where the turning points are likely to occur. And the important part here is you must always know the higher time frame position. If you know where the position is, you will have expectation about what to look for, where. Okay, see, I know what to look for. I know it's going to pull back, probably test the breakdown. So at the breakdown, I have an expectation. What's the expectation? Turning point. Where? Breakdown. What am I going to do now? Mark that level. Then what am I going to do? Wait for it to tap that level. Then what am I going to do? So on and so forth. Wait for the turning point. Then what I'm going to do? Decide where to enter. If I miss it, what do? Wait for a rally. Then what am I going to do? Look for a breakdown within that rally. Then what am I going to do? Measure the rally pullback. Then what am I going to do? Look for rejection as it pulls back. Then what am I going to do? Enter the order. Then what I'm going to do? Have the stop and the target, and that's it. So that's what I'm trying to get at. All right, knowing what to do, when to do it, and expecting it in advance. All right. And if it doesn't work out exactly as expected, you don't enter. All right. So anyway, let's frame this the right way. I'll get rid of all this. All right. So here we see that the market pulled back to test the breakout. Where was the change of behavior? The change of behavior was here. From what? From the test of the breakout. Understand? Right? It was from the test of the breakout that you had a change of behavior. Did it break a trend line? Yes, it did. Right there is and this is a pretty steep trend line. And it broke it with a change of behavior. So the trend line broke with a change of behavior. I don't really use trend line the way the Forex guys use it. I use it a little bit differently, more in a practical sense of how it breaks with a change of behavior, and as a measuring tool. Really, that's about it. I don't say, oh, it penetrated the trend line, that's a buy, or penetrated the trend line, that's a sell. That's incorrect. Totally incorrect. All right. And you lose a lot of money that way. I know it's easy to draw a trend line, but that's not going to work. So anyway, it breaks with a change of behavior, then comes in and taps in. And this is all at what? A test of a breakout, which had one rejection, retested, had the second rejection, and on the higher time frame or higher brick size, broke, and then started going down, 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 down. So one of the things you want to do now is, yes, you're looking at levels. So what am I looking at? I'm looking at support levels. But there's nothing wrong with drawing a trend line. Like, what I don't do is draw like 20, all those too many trend lines, because that's useless. But here, for example, it wouldn't surprise me if we have You see this? However you want to draw it, you can very clearly see that the market had a shortening of the thrust to the downside. Oh shoot. I don't like drawing trend lines. Right? You see down, ding, 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 and now it's not going down anymore. You see how it's staying away from the trend line? The thrust is shortening. And what does it do? It reverses. Why? End of day short covering or whatever, but I won't be surprised if there's a nice little bounce back to a resistance level. Now, you see how it broke? It broke with that. That just whap smacks the bulls. I mean the bears. Bull just, you know. So you got to just start putting all these things together, and I think that's about it. The funny thing is, this was the really top trade, but without knowing the higher time frame, you can make a lot of mistakes. For example, a lot of bulls, they will look at this and think this is bullish, right? They're gonna look at this and say, "Oh, look at all this buying pressure." Yeah, buddy, but you got to put it in context of a trend. When you put in the context of a higher time frame trend, then you might see something. For example, you might see that this whole thing is a pullback, and this could be a minor climax. And one more thing is, when it did this, let's see, this high was 24.6, this high was 24.4. It upthrusted, and there was some volume here. Look at those two, green and red. See that, green and red right there? Now what happens when you have all that volume at a resistance level, that upthrust, that goes in the opposite direction? That's distribution. That's what it is. This thing is distribution, right up there. When you have a bar that has a lot of volume, you know, and it cannot hold, meaning immediate reversal down after that, after an uptrend, it's an evidence of distribution. Anyway, here it really was telling that the test of the breakdown is done, the distribution is done, and they're going to puke. And that's what happened. Here, this is like very pathetic. I thought it might come back and test this. See this little thing? But it was just too weak. And it broke down, and then the next area to look for a pullback to test was right there. Anticipated in advance. What happens? You have this minor change that goes where? Right here. And what did I explain right now? You have a lot of volume, and it doesn't hold, and start going down. What is this? Distribution. It's the biggest volume in 100 bricks, and it cannot even hold. It doesn't even have one bar of follow through. Immediate reversal, this distribution, they're all selling into this against this level. Look at the damage done. This right here is a shit move. Again, what is this trying to do? There's nothing more. If you look carefully, see this low? What is this from 1 to 4? 4 with the wick. This is your breakout. Break down or break out to the downside. What does this do? Test it. What happens? Break down after that. Here it gets iffy, like you gotta watch out right here, because there's some buying pressure coming here, and this here is some type of spring below this area to reverse it back up. And now we're going to watch and see what happens. You immediately want to draw your lines. see what happens. Anyway, it's a long video, but it's not easy to explain this. Take care, guys. Bye.